All right, Theo traders, let's get into it. Share my screen here. We are live. And today is Monday, the 18th day of auspicious August 2025. Gianni live here with you for TheoTRADE. It's great to be with you as always. Still broadcasting to you live here from Central Italy. You know, the theme over the last few days here has been really hot, humid mornings. Then we get just absolutely nailed with thunderstorms in the afternoon. So yeah, still pretty stormy right now, but we have a bit. I think it's going to pause here in a moment, but it makes the evenings very cool, very pleasant. You almost have to dress up as if it's the fall. So very different than how it was the beginning of the month when it was just just scorching heat all day every day. But I'm going to be talking about some very interesting stuff later this week. So I hope you stick around with me because I think you're going to find it very interesting, and I'll be able to share more on that front here soon. So it's Monday. We'll be looking at the mid cap sector. A lot of interesting stuff over the weekend. It was another weekend filled with research and analysis on my end, and just seeing a lot of people saying that this market's about to implode. And so at the end of last week, we went through and looked at some of the various sentiment surveys and sentiment readings that basically said, hey, there's a big expectation for the market to drop, and a lot of people are expecting this market to pull back. And to an extent, as someone that's been bullish for the last 4 months, I understand. I sympathize with that position. I mean, this rally is over 4 months old now. That's pretty mature from a historical standpoint. And so where does that leave us? Does that mean we automatically correct back down lower? Not necessarily. We've talked about how, the market can correct through time instead of price. And last week we saw some notable movements in the market, meaning that we saw the healthcare sector emerge as the best performing sector of the week. And the surge in healthcare was so strong that it actually put it into the best performing sector over the last 30 days. And that's significant because it's been the worst performing sector year to date. So, is this the start of an epic rotation, or is this the first sign that, well, I shouldn't say first sign, but another sign that we need to be cautious? Because if you've been tuning into my sessions on a daily basis, you will remember that that I've been looking at a few sectors that have popped up in a leadership positions. We had utilities, we had healthcare a few weeks ago, and I said, hey, we got to be careful. Then 2 weeks ago, it was consumer discretionary. So last week I took on a little bit more risk. Now with healthcare coming out as the best performing sector, I think we need to be a little bit careful. I think we need to be a little bit careful near term until we settle into this week and see where the money is flowing. So again, healthcare has a tendency to be more of a defensively oriented sector. Okay, it's also, however, the second largest sector in the S&P 500 behind technology. So you do want to see healthcare doing well. You just don't want to see it doing better than the other sectors. That's the catch. And that type of comparative or relative analysis, right? Like, oh, the S&P's up 5%. We want to see healthcare up 4%. We want to see tech up 8%. That's bullish. If you see the S&P up 2%, technology up 1%, and healthcare up 5%, that's a bit more of a concern. And so those are the types of judgments that we make that help us assess and determine whether it's an environment to take risk. Okay. So I'm also going to be talking about two areas of the market anticipating lower interest rates. We've been talking about them some more, but I kind of want to build out that idea more with you. But before I get into all of that, mindset as a trader is probably one of the more important things that you need to spend time on. It can be very easy to fall into a trap of getting lazy, getting sloppy in your trades, especially if you've been winning a while. Greed is a real thing. It's a very real phenomenon. So is fear. But since we've been winning a lot lately. I think that we need to focus on the greed component more than anything else. But if you're still getting started in this trading business and you're still figuring it out, not making, money hand over fist yet, that's okay. If you're still trying to get into the lifestyle of being a trader, being a market operator, there's some things you need to think about. And there's a big debate in, like, mindset circles. How much should you sacrifice? Should you dedicate your life entirely to something? Should you go into quote unquote monk mode and not talk to anyone for months or years until you figure out whatever you're trying to achieve? Or do you try to detach yourself from the situation? Do you try to detach yourself from the situation? There's something to be said about being at peace with the outcome and just going into something and having fun. That's why I preach that a lot here at TheoTRADE, because sometimes if you're too serious, you're actually impeding yourself, and you're preventing yourself from expressing your creativity, and you're imposing limitations on yourself. And you can't do that in this business, because really trading is a business without limitations. Once you have enough money, once got enough expenses covered, you can do this from anywhere. There's no rule that says how much money you're allowed to make on the year, right? You can make as much money as, based on how good of the decisions you make, right? But there's also sacrifices that you need to make too. You need to spend time looking at charts. You need to spend time crunching the numbers behind a trade. You need to spend time keeping up to date with what's happening in the world and what's happening in the markets. Where is the money flowing? That takes time. It requires sacrifice. So it's not like I just stroll in here, roll out of bed, 15 minutes ago, and, just comb my hair and get on camera. And I'm like, hey guys, this is how I feel today, what we're going to do, because, the market is here for me and I'm not here for the market. No, we are here for the market. We are here to respect the market, understand what its purpose is, right? But forever being at peace with what we decide to do. Okay. So my desire for one particular trade to work out is not that high, because one trade does not define who I am as a trader, does not define whether I'm good or bad. Now you might be thinking like, oh, well, every once in a while you say you're only as good as your last trade. Yeah, I'm saying that like kind of in jest, halfway joking, right? But what defines you is the system. The system is what helps you be disciplined, is what helps you. It gives you a framework to cut out time the rest of your day. It's the means by which you are able to sacrifice. So you either have to increase your sacrifice if you are new to this business, and I would actually recommend that is where you start off, because there is a big learning curve. It takes time, it takes energy. You have to reshape the way that you think. But if you've been doing this long enough and you haven't really fully achieved the results that you want, I actually think you need to decrease your desire, right? And you'll go through different phases throughout your trading career, kind of, it's like a teeter-totter, right? A balancing act. Um, if you're too serious for too long, then yeah, it's actually going to impact your results. I mean, if you become so invested, like, hey, I'm bearish gold, guys, gold's going down, and you build out a whole identity around being bearish gold, for example, and then gold goes up. Well, what you're doing is you're limiting yourself, in the sense that you're distracting yourself from other opportunities out there. So we only have so much time. We only have so much energy. Things that I need you to think about when we are in here each and every day together, which I appreciate you guys tuning in. Let me jump over to Thinkorswim. Let me see who's all in the house today. Always, I'm glad that you guys get to tune in. It's Monday, so, start off the new week. Mondays are my least favorite day of the week to take on, big new trades. I view Monday as kind of like the opening bell. Like the first 30 minutes, first hour of trading is kind of sloppy. A lot of erratic movement, retail getting aggressive in one particular direction. I just see Monday as kind of like a bigger macrocosm of that. So, Mondays we do a lot of analysis here, talk about what our plan is for the week, and then just see how it materializes going forward. And of course, review what we did in the previous week, because that's important as well. We have Rick S, John G, Rodney G, Jackie J, Secret Agent Charlie, Tim, Roger Bro, Nora. Greg, you think government will run inflation hot and stocks will melt up? I mean, that is a possibility. That is a possibility. Stefan likes trading because it's a new puzzle to solve every day, but it can be unforgiving. Yeah, it is. And that's the sacrifice that it requires, right? But if you have a good system, then I think it's just a matter of decreasing desire. It's crazy. It's like the more you want it, the less that you're going to get it. The more you want it, the less you're going to get it. So Les, Cal, Randy, Gaston, Ed Mines, Mari, Frankie, Steve, Terry, P Butts, Peter, how's it going? Shirley, you're done. Yeah, we can look at AAOI. Bring that up when we get into the stock analysis portion of today. Sell it, yo. How's it going? All right, everyone. We're into the charts now, taking a look at the dollar yen as we normally do. Early in the week, each week, I like to do a brief review on trends. You know, there's trends that exist across different time frames. You have long-term trends, short-term trends, intermediate-term trends. I like to use the daily chart for short-term trends, monthly chart for long-term trends, intermediate-term chart for weekly, or the weekly chart for intermediate-term trends. Uptrend, very simple. Higher highs, higher lows. Downtrend, very simple. Lower lows and lower highs. When in doubt, zoom out. You're going to see bigger moves in the direction of the longer term trend. That being said, you can see short-term downtrends within long-term uptrends. And in fact, the dollar yen could be a good candidate for that to display, right? The long-term trend, as we just had on the monthly chart, undoubtedly up. The Japanese yen has been absolutely decimated in the last 15 years. Over the last several months, though, the yen has actually appreciated some, but it does appear that the trend is starting to turn back higher, higher highs and higher lows here. And so, you know, you break above this resistance zone at 150 to 152. We'll talk about support and resistance again later this week. I think that you're going to start to see the dollar strengthen some more, and that's going to have some consequences. You know, there's a reason why we start off with currencies each and every day. This is how you measure whether money is flowing into a country or out of a country. And so I prefer to be trading the market on the long side where money is flowing into a country. And so when the dollar is going up, that's how we know that money's coming into the US. It's really that simple. So the big three currencies that you need to be aware of, it's the first charts I look at every day. Dollar against the yen, dollar against the euro. Those are the big three currencies: dollar, euro, yen. Okay. So you take out this high here from April 1st or July 31st in the euro, in the dollar yen, you pretty much got an uptrend at that point, and the carry trade is back on. We'll talk more about that later this week. You can see here the euro against the dollar. The dollar is up today pretty much across the board. And, you know, a couple of weeks ago, we actually went short the euro, got stopped out a little bit, but by just a little bit. I mean, it was like we got stopped out at the high of this move. And that happens sometimes as a trader. Do you see me, you know, like not getting over it? No, we're on to the next trade. And I'm just sharing this just so you know, like, I get stopped out too. Like every trader I know gets stopped out. Every profitable trader, most importantly, I know gets stopped out. And so this is why I preface today's discussion about decreasing desire. I don't desire to be correct on every trade. I desire to make money, but you know, my worth, my value of how I value myself is not, you know, measured on one individual trade, right? So now that we're looking at the euro here, which took out this low from the 17th of July, you can see how we took that out to the downside. You rallied back higher, formed a lower high here on July 24th. And so if you take out this low, then downtrend, lower lows and lower highs, and you could start to see the euro roll over. So we had that Trump-Putin summit on Friday. It does appear that, you know, now you have some various European leaders coming to the table, Zelensky, obviously. And I don't know, it's crazy to think about this. I don't know what's going to happen, guys. I really don't. But the way I see this chart, I'm open-minded to the euro selling off. And so that leads me to ask the question, like, what needs to happen for the euro to sell off? And it's funny because I talk about how it's okay to speculate on that and entertain ourselves, but that's not really what goes into making decisions as trading. I do that more for conversational sake, just so you can see how markets have a tendency to price in events. The market knows things before we do. We don't know why, we don't know how, but there is some sort of order to this chaos. And the beauty is that with the right tools, you can break down this order and understand it to a greater depth. And it almost like it it humbles you in a way, right? Because you have people out there that are so hell bent on predicting things and saying, "Oh, look, I told you so," and the economy is going to collapse next week. Oh, the dollar's going to collapse, and bricks this, and Bitcoin's going to $1 million, gold's going to $10,000 an ounce. AI is going to eat us next week. Like, there's all these predictions out there, and I'm just of the I'm in the philosophical camp that the market knows better than us, right? And so that's why you see the markets usually react to events before the events usually happen, right? And there's so many instances of that in the past. So that's why I tend to fall in that camp. So yeah, I mean, Euro takes out this low to the downside on August 1st. I mean, look out below. We'll see where this settles. You take a look at Euro against the yen. Euro's actually up against the yen today. So that tells us that Japan is where money is flowing out of the most, which is interesting because you have the Nikkei hitting new all-time highs, NKD, right? And so you might be saying, well, how is money flowing out of a country even though as the index makes a new high? Well, this is the beauty of it. This is why we look at currencies. The yen is losing value. That's why it's going down against the dollar and the euro. The yen is worth less, but it's worth less, but the shares, the value of the stocks are still worth what they are. It's just the money's worth less. So the difference between the two is that if you saw the yen going up with the Nikkei, it would mean that people from outside of Japan are buying yen to buy the Nikkei, but that's not what we're seeing. We're just seeing the Bank of Japan destroy the value of their currency. And because they're destroying it at such a fast rate, the stocks, in other words, are holding their value faster than the yen. They're holding up their value better than the yen. Okay. So all things that are fun to contemplate and I think will help make you a better trader and investor and make better decisions because that's really what it comes down to. All right, bonds are still selling off here. You're seeing the 30-year bond sell off down about 0.25%, selling off more than the 10-year note, selling off more than the 2-year note. The rate cuts are coming, guys. The question becomes is how do long-term bonds react? And the reason why we have to ask that question is because long-term bonds are the most sensitive to changes in inflation expectations. And what are short-term rate cuts? What is a short-term rate cut? Well, that's money printing. The Fed creates money out of thin air to buy those bonds to cut rates. I should say buy those T-bills because when they're raising and lowering rates, they're only doing it on those very short-term bonds. There's bonds with different time frames out there. And when the Fed did QE those years ago, they were buying those 30-year bonds, those long-term bonds. They never did that before. They never did. Okay. Well, I guess you could say they did back in like the 40s during World War II, but that's a different story. That's actually why you had Ben Bernanke at the helm. He actually did his like doctoral thesis on stuff like that. But anyways, beside the point, you have the 2-year note here, which is selling off some. This is the tail that wags the Fed dog. I say that every day. And it's important because you see this break out, you see it go to the upside. That means that rates are coming down and the Fed's going to lower rates, guys. It's coming soon. So we need to be ready for that. And the question is like, where does that money go? Well, it's probably going to go into stocks, probably going to trickle into commodities some. But it's not going into commodities right here, right now. How do we know? Well, wow, we did get quite a reversal here in crude oil. It just happened. When I was looking at crude oil this morning, did we just, let's see, did we just roll the contract? Yeah, we just rolled the contract. So let me actually look at the, yeah, okay. We didn't take out that low from last week yet in the October contract for crude oil. But, as long as crude oil stays below this $64, $68 range, I just don't see it being the place to be. There will come a time for crude oil. There will come a time for energy. But that is usually what you see rally the most when you get into the later stages of the economic cycle. And so the fact that we're not seeing crude oil do very well, the fact that we're not seeing energy do very well, sends a strong message that we're early. We're early. And that matters. That matters quite a bit because it matters in terms of where you're going to be positioning yourself. It matters in terms of what stocks and sectors you're going to be buying. And it's not energy right now. It's not energy right now. So that day will come, but it's not today. It's not today. Let me see. Okay. So that's what we're looking at in the energy space. You can look at the ETFs, XLE, XOP. Yeah, they're down some, but not really the most exciting day. Let me check the portfolio real quick. Tim's gonna get a paint roller out so you can watch the paint dry. It's more entertaining. Um, yeah, Mark. I mean, I'm down slightly today, but really nothing much. It's pretty much flat. I mean, being down 1/4%. I don't really, yeah, I mean, obviously you're literally down, but that's not like, I need to make some changes here. No, to me, let's just let it run and see where we settle on the day. Um, let's see. Okay, let's jump over to the stock market because I have a lot to talk about there. As I seem to have the most to say on that front. Yeah, the S&P's down today, kind of just hanging out near the lows. This does look like a consolidation of the losses. Okay, meaning that when you have a break below a key technical level on the chart. And instead of snapping back quickly, you kind of go sideways, which it appears that we have here. It is a warning sign. It is a warning sign that you could go lower. So after seeing healthcare lead last week, okay, now we're seeing the NASDAQ lead to the downside. You're seeing semiconductors up on the day, which is a good thing. Okay, so I say this is good, this is bad, this is how we see it. Healthcare is up again nicely today. And it's up more than semiconductors. Tech XLK is down some. It's kind of a snooze fest, okay? Kind of a snooze fest, as some of you are saying in chat. Utilities down, consumer staples up slightly. But when it comes to healthcare, okay, this looks like a sector that is trying to hammer out a bottom. A lot of people out there talking about United Healthcare, UNH. I wouldn't touch this stock right now. It gets above 325, 330. Okay, we can start having a conversation about it, but I'm going to be honest with you, there's a lot of other better opportunities out there. You don't need to become enamored and infatuated with, this stock that was worth 5 billion a month ago is worth 2 billion today. Well, there's a reason why. There's a reason why. And, they had those, the Medicare scandals, all that kind of stuff. A lot of issues in the healthcare space. But you can see here how we did bounce off support. So, I wouldn't be surprised if maybe we didn't bottom yet, but bottoming soon. Maybe we'll retest the low in a couple of months. But yeah, United Healthcare Group, people talking a lot about that, but I do think there is a bigger opportunity brewing in the biotech sector. And the reason why I like biotech is because it offers a nice blend between healthcare and technology. Technology is what creates productivity. Technology is what creates growth. There's a reason why when a bull market is healthy, you see sectors like that do the best. And by extension, you will see stocks in those sectors do the best. So I'm watching this very closely. This is one of those sectors. I guess there's actually three if we talk about it, if I talk about it out loud. One of those sectors that is highly sensitive to lower interest rates. Why? Because America is a very different place. America is a very different place. And I've been, I do spend a fair amount of time in Europe, but I've been here now for almost 3 weeks, believe it or not. It'll be 3 weeks on Thursday. And it's not America, obviously, right? So one of the reasons why it's not America of the many is that in America you have these biotech companies that will operate for years, not make much money, and then they'll hit a home run on a product and make all their money back and that's the way it goes. Well, the type of research and development that goes on in Europe or other parts of the world is not quite as rewarding, let's say, as the American system. Now, the American system has a lot of issues, obviously, with like, the pricing of drugs and whatnot. And there's going to be some reforms on that, it seems. And I think that's, been a big reason why the sector has struggled so much over the last few years. Because I mean, look at XBI. XBI, okay, don't let that deceive you. You look at the monthly chart, XBI hasn't hit a new all-time high since 2021. How about that? Same with IBB, okay? These sectors have done nothing. They've done nothing. And there's been all sorts of fallouts post-COVID, all these scandals in healthcare and drug companies and all this. And the sector's been rocked. And it seems like there is a reform happening. So could that be the catalyst, the reason to send this back higher? I'm not ruling that out, guys. And it's funny, when I actually got into the trading world, like biotech was one of the hottest sectors. I'm talking like back in like the early 2010s. Like all I heard from years was biotech, 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 and then it's really done nothing ever since. So I think this could be one of the areas of the market where we need to be prepared to spend a lot of time spend a lot of time researching, and spend a lot of time looking for the best opportunities. Because again, it offers a nice intersection between healthcare, which again is the second largest sector in the S&P, and technology, which is the largest sector in the S&P. I mean, talk about a marriage made in heaven if you want to be on the long side of this market. And so the reason why low interest rates matter for biotech is because when you're a company that doesn't have a lot of revenue, like a lot of these companies are, you're living on debt. You're living on debt. And so when interest rates go up, it's a lot harder to live off debt, obviously. Like we always talk about in the trading world, like, oh, even if you're making all this money trading, like, don't get lavish in your expenses. It's better to try and live a simple life because you can't take anything for granted in the market. That's okay. There's nothing wrong with going out and buying a Ferrari. God knows how many Ferraris I've seen in the last couple of weeks. I enjoy seeing it. They're nice cars, no doubt about it. Had one parked in front of my house yesterday. Love it. Actually, it's a car of a friend of mine, but the reason I'm saying that is because these companies, they don't have revenue. They don't have revenue. They need low interest rates. And so there is a reason why biotech did so well during the period of QE. 2015 was like the first taper tantrum, if you remember, if you were around trading during that time. And then you finally broke out 5 years later. So every time we go through like a rate hike cycle, it takes several years for biotech to recover, because that's what happened in 2022. The biotech sector topped out a few months before. And it's taken 4 years for this to just settle down and start to build a base from which it could go back higher. But mark my words, we're talking stocks that can move 30 to 40% in a day, guys. One good headline, one FDA clearance, one drug trial that goes well, boom, to the moon. People talk about crypto. I mean, the real opportunity might be in biotech, if we are being honest with ourselves here. Yeah, I'm not really the biggest Bugatti guy, Tim. I do like Ferraris though. Even with Lambos, I'm not really a fan of Lambos. I know that makes some of the Lambros in the crypto world a little upset. I'm gonna take my Lambro, convert it into a rocket, and go to the moon. I'm joking, obviously. So we try to have fun here, guys. Try to have fun. It is important. So, okay, so that's what we're seeing in the biotech space. That's one of the sectors that's going to benefit from lower interest rates once the Fed cuts. I'm going to talk about two other ones in a moment that are related to stocks, but just checking back in on the indices here. One market I'm increasingly infatuated with, for lack of a better word, is China. China, we're seeing some really good things happen there, even domestically. Let me go ahead and share this. You saw one of the biggest days of domestic buying, not in the US, but like local buying. Chinese investors buying more of the Chinese market than we've had in years. Look how high we got, guys. So what does China know that we don't? about their own market, about their own market, right? This isn't COVID. Like, oh, there's a virus in China. No, this is the Chinese buying their own market. So more than 2021, more than 2020. You had some big spikes earlier this year. The market's been doing good. Remember, it started going crazy in 2024. It started going crazy in 2024, right around the time when the Fed first cut rates. This big green candlestick here in September 2024. Do you remember when the Federal Reserve panicked and cut interest rates by 0.5% when stocks were 2% off their all-time high a couple months before the election? I do. I do. I enjoyed it. I made money off it. I'm not complaining. I'm just saying the Chinese market did very well during that time. Now, why does that matter? What do interest rates in the US have to do with the Chinese market? Well, as it turns out, quite a bit. Let's put all the tariff talk and the trade talk aside for a moment and talk about interest rates. You see, interest rates are the primary tool that central banks use to compete for money in the world. So I like to call it quote unquote global capital. What is global capital? Global capital is simply just all the money in the world, all the money in the world. And it's not controversial to say that that global capital is going to go where it's treated the best. It's going to go where it's treated the best. And so because of that, when the US lowers its interest rates, it makes its bonds, its interest rate markets less competitive. China has lower interest rates than us. So if we're making our interest rate markets less competitive than China's, the incentive to put money into the US is no longer as high as it is to put it into China. That's why you saw this big spike back in September of 2024. And that's why right now, this market in China is getting ready to rip. It's funny because I don't know if Brandon's listening right now, but he was just sharing some big winning trades he had related to China, actually. So I know I'm not the only TheoTRADE instructor talking about this, but we've been talking about this in my session since the beginning of the year. In fact, even when the market started blowing up, the whole DeepSeek thing that caught me pretty nicely back in late January, early February, Chinese stocks actually held up pretty good. So, yeah, I think there's a lot of opportunity there. Chinese internet names, especially, China's a real contender on the AI in the AI arms race. Here in Europe, you really only have like one European AI entity. It's called Le Chat, which is French. And if you speak French, it's very funny that it's called that. I'm not going to tell you what it means because it's inappropriate, but it does mean well, the chat means the cat. And if you speak French, you know why it's even funnier. So the reason why I say that is because that's like the only AI that's like up there with like Chat GPT and Grok that's actually functioning. So Europe's effectively not in the AI race. Okay. But China is, and they're giving the US a run for their money. So we'll see where that goes. I think it bodes well for a lot of names in the space. Got my eyes on some names like Futu. This was a Trinity trade name. We had a little bit of a profit on earlier. Alibaba, obviously shaping up pretty good. You have BYD, some of these other Chinese names that I think looks good. Been watching Baidu here. You have earnings coming up. This is a name that has been interesting to me. It's basically the Google of China, and it's done nothing for a few years, for several years. And so I wouldn't be surprised if this terrific 10 name came back alive. So that is sector or country or market number 2 that is going to benefit well from lower interest rates. Now on to number 3. And I know many of you trade the Russell 2000 here. Okay. So let me show you this graphic. Get ready for a small cap spectacle. Okay. The quote unquote very smart Wall Street class. They are so sophisticated with their Bloomberg terminals. Nothing wrong if you use a Bloomberg terminal. Okay. This data comes from Bloomberg, right? I don't use a Bloomberg terminal. I don't need one. Would I ever use one? I mean, I guess I really want to pay for one. Someone wants to let me use theirs. I mean, sure, but not what I I don't need it, right? All my information's in the price action. My information is in the price action. And that's what I study and that's what I trade based off of. So you still are seeing more and more people pile into shorts in the Russell 2000. What is that setting up for? An epic squeeze. Now, why does lower interest rates help the Russell 2000? Well, because once upon a time, you used to see the majority of Russell 2000 stocks actually be profitable. That is no longer the case anymore. That is no longer the case anymore. So it's kind of a similar story to the biotech one. Not as many profitable companies. And when you're not making money, you're living off debt. If you are spending more than you're bringing in, well, you better hope for lower interest rates because interest expenses are a real line item in your business, in your expenses. Okay. So get ready for a small cap spectacle, guys, because yeah, these lower rates, it's going to lead to a big rotation in money in the market. So this is one of the periods of time where you need to be paying very close attention. We have the game plan. We have the tools. We have the knowledge. We have the know-how. We've done it before. We're going to do it again. And it's a very simple process that we walk through. Okay. So small caps, the other one that I think is going to do very well in the world where the Fed starts to lower interest rates. So I just threw a lot at you. Let me just check here. Baidu, yeah, I just talked about that. I don't know if you had asked before I did. Terry, thoughts on precious metals between now and end of the year? I think you're going to see a big correction at some point, Terry, but I think it's a correction you're going to want to buy. So I have a little bit of exposure to metals right now. It's not huge, but I definitely am allocated, and I definitely think that maybe you get one more rally, but there is the potential for a real pullback, like a significant one that'll shake a lot of people out. So HSAI, please, Mario, you want to look at that? Is that that's yeah. Someone I can't remember if it was this stock. Was it this one? This looks great. This looks great. Mari every once in a while drops some really good nuggets on us. And if it wasn't for Monday, I would say, hey, this looks like one we can buy. I'll set an alert here so we can come back. 27.94. Okay. It looks very strong. Yeah. Yeah, it looks good. Okay. Now, I told you how, earlier in this session, healthcare leading suggests some caution for the market in the near term. Well, I am not someone that loves to relish and roll around in the bad news. I'm not an eternal optimist. I don't think everything is going to be awesome all the time. I'm not naive in that regard. Okay. Bad things can happen. Bad things do happen. But when it comes to the economy, there's just it seems like there's this constant obsession. Oh, everything's terrible. Everything's awful. I don't know how the average person is making it. Well, I agree. I mean, I grew up and I still live in an old Rust Belt town in the Midwest. I have eyes, guys. I see people that I grew up with, kind of end up on paths that are very sad, and I wish them the best. And sometimes it's because of their own decisions. In fact, I would argue majority of the time, but sometimes it's not. Sometimes it's not. And so when it's not, compassion is deserved. But I don't like the forever economic collapse stuff because I've been hearing this stuff my whole career, and early on in my career, it prevented me from progressing at a proper rate, right? And I actually have to thank technical analysis and the study of chart patterns for breaking me out of that mindset, honestly, because I wanted to trade, I wanted to make money. What I'm showing you here is credit card balances as a share of after-tax salaries and wages are below 2019 levels. So all you always hear is, oh, the debt is so bad, whether it's federal debt or margin debt or whatever, everyone's just drowning in debt, everyone's bankrupt, no one pays their bills. Yeah, we have a debt problem, guys, but the problem is with that is that money is literally debt. So we talk about mindset stuff and like the law of attraction and all this. If you say, oh, don't necessarily agree with Dave Ramsey on some things. I don't go out and borrow money to, oh, I'm gonna go borrow money to buy a new Rolex. First of all, I don't even wear a watch because I don't like that weight on my hand. I wear a bracelet. It's the Italian in me, whatever. But I'm not borrowing money to spend money on stupid stuff. Okay. If you borrow money to get into business, borrow money to generate cash flow. I do trade on margin sometimes. Technically, I'm borrowing money to buy stocks, but I'm a professional. I know what I'm doing. It's a little bit different. Okay. Money, debt is money. If you say, oh, all debt is bad, you're saying all money is bad. I don't think that's going to attract money to you. Just my humble opinion, guys. I'm just a humble retired farmer who usually lives in an island in the river, but for now I'm in a valley in a mountain range across the Atlantic. So, what do I know? So yeah, I mean, don't some people can't control their spending. I get it. And for people like that, yeah, no debt at all. It's like it's like addiction, right? Some people just can't help spending money. Gambling, you know. You see that in markets too. People gamble. We don't gamble. We are actually not gambling. We're not. Our odds are much better than gambling. And so yeah, people that understand the probabilities and the math behind it would say no. I mean, those are odds you take to the bank every time. Everything entails risk in life, right? Even something as simple as walking across the street entails risk. You never know. A bus could come by, an asteroid could fall on your head. You might get struck by lightning. Everything entails risk. Some risks are higher than others, right? So, anyways, I know I'm exaggerating a little bit there, but yeah, no, all good stuff. Am I living in a van down by the river? No, I'm not. No, I'm not. Marcus, if half the consumer spending is from the top 10% of earners, a lot of people can be hurting, and that may not damage markets much. Marcus, you're absolutely correct. We talk about that all the time in here. Absolutely. I said, guys, this recession thing, you have to understand how much of the economy is consumption. Households above $250,000 account for over half of the spending in the economy. You are 100% correct. We talk about it all the time. Um, so yeah, I know Chris Farley joke. Yeah, good guy, good guy. You're not gambling when the market goes up 2/3 of the time. I mean, yeah, I mean, if you're like going out and buying, if you're like YOLOing options, like, oh, this option expires tomorrow. I'm going to put, 100K on this option. The S&P is going to go up. Yeah, I think that is more gambling than speculation. I don't think your odds are very good on that. But, I'm sure you can quantify that exactly if you're interested in doing so. All right, let's take a look at crypto because a lot of interesting stuff happening there. Are we getting a little bit of a rally here? Bitcoin is down. I would love to see Bitcoin try to hammer out a low this week or next. We are due for that, believe it or not. Same for Ethereum. So Ethereum is up off the low of the day a little bit, as Frankie pointed out in chat. But honestly, I would also prefer to see this chop around some. We did see. I just don't know. What's crazy is like I don't know who these people are. Like we see the data because it gets reported, but people are adding to their short Ethereum positions. How long have I been sharing this data with you? That hey, Ethereum shorts are at record highs. Well, apparently there's someone out there that just really hates Ethereum, and I don't know why. I don't know who it is. Quite frankly, I don't really care. And quite frankly, I'm not trying to convince them otherwise because I own Ethereum. I'm bullish Ethereum. We are long Ethereum since April 22nd or April 23rd. Okay. And yeah, it's been the trade coming out of that April low. It has done very well for us. And so seeing someone believe that they are smarter than the market, that's just one of those instances where I just smile and nod. Actually got to say, well, I forgot to tell you guys, probably why I didn't bring it up first. I did lose, my team did lose in that soccer tournament, 1-0. Um, and yeah, the team that we lost to, um, lost 3-2 in the final because it was Saturday, Sunday, and it was the team that we lost to 1-0 the first game. So we lost the first game, won the second game, and then lost the third game in the semifinals, and we were out. And then the team that we lost, both the teams we lost to played in the finals, and then they won by one goal. But yeah, not so happy with some of the decisions made, but you know what? I don't really care about soccer anymore. And if anything, I was reminded why I prefer individual endeavors now, which is trading. I believe in I do like teamwork, but it's sometimes the thing with teamwork is that people aren't on the same page. You can only pull so much weight, right? If you got two guys on a team of 11 doing their job against eight guys on a team of 11 doing their job, you're probably still not going to win. I don't care how good you are. So, anyways, yeah, that's done. So now I can get back to my martial arts training here. There's actually a local gym here that I go to and do my martial arts stuff still. A little bit different from back home. It's not as boxing oriented, more MMA and kickboxing. But it's still good to get the rounds in, so I can get back to that. Anyways, there was something else I was going to tell you before I got off on that sidebar. It was related to Ethereum. Anyway, so yeah, I mean, whoever's short, and then you see a lot of asset managers that are still not meaningfully allocated to crypto. That's good. That's good. So when you see the majority of fund managers, bump it up to like 8% or more, because like they're really just now allowed to buy this stuff because the ETFs, there were huge regulatory headwinds. And so now that this has become mainstream to an extent, we have to calibrate our return expectations. The easy generational life-changing money is not there anymore. You're not going to get those types of 10,000% returns. I know people are like, oh, Bitcoin's going to be like $8 million by 2030. Here's why, because if it follows the same annualized return over the last 15 years, this is what it's going to be. And I'm just like, wow, like economies of scale. That's not how models work. That's okay. That type of misunderstanding is part of what makes a market, guys. We're basically playing on the same team here at TheoTRADE. So like I'm happy to explain this stuff to you. This is what I was going to say. For the first time really ever, maybe it's because like people are more interested in like what I've been up to because I've been coming back here more. Like people ask, they're actually like asking me about the market. Europeans approach the market very differently, but they trade American stocks. They're not like, oh, like I bought like the Chat GPT, like the French the French AI. No, that's not what they're doing. They're not talking about European stocks. They're talking about American stocks. But it is interesting to see people bring up like Nvidia to me, and it's not necessarily a top signal, guys, because it's not that many people. These are like business professionals. They're people like in the periphery of the financial world. So it's not like some guy that is an Italian farmer is bringing up um, Nvidia. But yeah, I mean, I'm with you, Rio. We need shorts to fuel the rally to 8K. I mean, we've been talking Ethereum 7, 8K, and I am still maintaining that upside target. Um, so it looks good. It looks good. Let's take a look at gold and silver. Quiet day there. Silver's up a little bit more than gold. Silver miners are down. Gold miners are down less. So not really the strongest day for gold and silver. So now got about 10 minutes left, which means that we have some time to scan the mid-cap sector. Scan the mid-cap sector. Okay. So, all right, what do we have here? We have 46 names. This is actually higher than last week. We've looked at some of these names recently. You do got some Ethereum treasury companies that are up nicely. SharpLink Gaming, Pagaya Technologies. We've been looking, been having our eyes on that recently. It's kind of a nice setup here. Again, just coming off of what we had last week, I am a little hesitant to just say, oh, hey, go out and buy today. I don't like that after healthcare was the leader last week, after we've rallied 4 months. I'm still long. I'm still long. I'm more aggressive in the $1 million challenge portfolio. Trinity trade 20% cash, so we're taking it a little bit easy here. That being said, I mean, I might have a position triggering the Trinity trade today or tomorrow that brings me down to 10%. I'm just letting you know what's going on. But yeah, that's what we're looking at here. So I'm gonna set an alert here nonetheless, Pagaya, because it's a really nice setup. We've actually been watching this stock for a few months, but it's just been one of those names where we've been watching and watching. It's been doing what we wanted. and I just never really had like the perfect setup that I wanted to take. I guess it's one of those instances where we hesitated a little bit longer than we should have, but that's okay because there's so much opportunity in this market that we just look for the next one. Kratos Defense. I know some of you like this stock. Yeah, nice uptrend there. Bloom Energy. Yeah, this one has just been absolutely crazy. How are those other nuclear names doing? Yeah, Nano Nuclear Energy breaking down some. SMR selling off a little bit here. Okay. So that's that. And then Oklo's been the other. Yeah, there's probably be another nice buying opportunity in these here soon. You could also be arguing that a nice rotation is taking place. UEC, U. Yeah, oops, always do that. Yeah, buy the dips on these because I don't think the nuclear stuff is going away. How's quantum doing? It's actually showing up pretty good on the screen. QBTS, IonQ. I like IonQ. Almost a nice setup, almost a perfect setup, I should say, for IonQ. Qubit, that one's seen a nice rally today. I like the ARQQ one. This is quantum cybersecurity because it's going to change the way we approach cybersecurity. AG, go to options. Yeah, I'm still long AG. We are long that. It's still range bound, so no problem waiting on that. Carvana. Want to look at Carvana? Yeah, this stock's been absolutely insane. Again, if it's not like we never put out a trade idea on a Monday. I think we did 2 weeks ago. Or was it last Monday? My losing a little bit of track of time, being in a different time zone with you. But like we bought AG on a Monday. I'm not anti-Monday trading. It's just it's probably the least amount of the day of the week where I trade the least on the long side because I just like to see how things shake out. So yeah, Carvana's been incredible. Incredible. And I think that it's gonna continue to be incredible. So yeah, no, looks good. How are they still alive? I don't know, David, but they are. They are. All right, we have Power Solutions International, P6. I think we looked at this one last week. Let's see how it's doing. Yeah, beautiful uptrend here. Definitely set an alert here, 99.70. 99.70. APLD. Nice. That's actually a Trinity trade name. New highs. IREN. Yeah, this one's been really strong in the crypto space. It's funny because MicroStrategy, I don't know, guys, is Saylor going to become an Ethereum guy? Actually, this looks like it's shaping up for a bottom. I'll keep you posted on this. Yeah, kind of wouldn't mind taking a little stab at that, actually. We'll see. Um, Sunrun. Sunrun, yeah. Is the solar stuff coming back? Trying to. NXT is the one I like. NXT, Next Tracker. This is like my style. Oh, that's a nice trade. That's a nice setup. I'm gonna set an alert here. 66.31. Keep an eye on that. Yeah, it's been on my watch list for a while, actually. So let's see here. Got a few minutes left. See what else we can get into. Lemonade Insurance Company. Lemonade. Yeah, it's building a nice base. This one's gonna have a nice trade soon enough. So again, we're looking at stocks, a lot of setups. SSRM, mining stock, a little bit of a reversal there. D Local Limited, software company. I'm not familiar with this one, but they sure made a move. Looks like a bull flag here. So we're going to set an alert here at 1566 and see whether this eventually breaks out because I do like how this is shaping up. Looks like it's trying to bottom. Yeah. Wow. I like that. Right on. So it is a UK company. Elanco Animal Health. Is this coming back? I do miss my dog Enzo. My brother just went back home with his girlfriend a couple days ago, and my aunt's coming over now. So yeah, my brother and his girlfriend will be taking care of the dog of Enzo, but my brother and Enzo go back a long ways. They definitely have a bond. $27 stock. Yeah, this could go back higher. We looked at food tool already. RNA, Avidity Biosciences. Okay, so here we go. We were talking about healthcare and biotech. Yeah, I'm gonna want an alert on this one. 5250. 5250. So even like just doing what we're doing now on your own is such an important exercise. Just looking at the stocks that are shaping up, looking at the stocks that are showing momentum. You want to trade the breakout names. You want to trade the strongest stocks. Well, yeah, you got to look for them. They're not just going to come knocking on your door. You got to go digging. This is how we do it. Kanzun, 2244. Definitely want an alert there. All right, everyone. I got to start wrapping this up because Garrett Baldwin just joined this room. We had a really good session today where we talked about the importance to either increase your sacrifice or decrease your desire if you are on this path of a trader. Okay. And depending on where you are in your journey, one of those paths may be appropriate, but at some point, you're probably going to have to revisit the other, depending on how you've been doing. Coming into this week a little bit more cautious than last, mainly because of the rotation that we saw into the healthcare sector. That doesn't necessarily mean it's all bad news, but it does suggest after we rallied for the last 4 months that a bit of a exercise of patience would be appropriate. We talked about actually three areas of the market that would benefit from lower interest rates. One of them being biotech, the second being China, and the third being the Russell 2000. We also talked about Ethereum shorts doubling down on this market, which is music to our ears, screen some mid-cap names. And so that's where we call it a day, everyone. So thanks for tuning in. Garrett is in the house. Garrett is the host already. How's it going, Garrett?
Good. How are you? Give me 1 second. Just trying to find one quick thing, and then I'm going to turn
Sure.
my camera on.
Yeah, it's good. We had
Really
good
good on
questions today.
how are you doing? How's the trip been? Are you back?
Yeah, the weather's changing. It's getting a little bit more rainy in the afternoons, but it cools it off, so I'm not really complaining that.
That's good. That's
Yeah.
all right. Well, I am going to take over the screen right now, and then we're going to dig
Okay.
into a couple of things. Sorry, I didn't get a chance to catch your session. I'm buying a house, and I
Oh,
spent
nice.
but it's the second house that I've bought. The first one fell through, and this one has the exact same thing, the septic tank shot.
Oh no.
Two back to back. So now we got to go back and get that taken care of. They legally can't, force me to pay for that because that would basically just they have to disclose that now. But it's just one more headache.
I understand. Well, best of luck to you.
Thank you.
All right.
All right, everybody.
Talk to you soon.
So we are looking at a interesting day, just a lot of chop.